Hey everyone. So we're all likely familiar that worldwide governments are strongly incentivizing people to purchase electric vehicles, and they're providing tax credits, tax incentives, and many other ways to try and get people to buy electric vehicles. Well, the legacy car companies like Ford also know that this is the trend that we're moving towards, and they're investing billions of dollars to transition into electric vehicle production. So in this video, I'm going to walk through how Ford is attacking the EV market. So let's begin. So Ford is saying that Model E, which is its electric car division, operates with a startup intensity to build a profitable EV business with a differentiated portfolio and a differentiated customer experience. And they're on track this year towards a contribution margin approaching break even for its Model E, and for their first generation of products to be EBIT, earnings before interest and taxes, margin positive by the end of next year. So they've invested a lot of money into this production, and now they're getting to the point where they're going to be, relatively profitable by the end of next year, even at, the scales they're at now, which is significantly smaller compared to where they will be 5 years from now and 10 years from now in terms of the percentage of cars they sell being electric vehicles. So for their most recent quarter, sales of EVs were down, but that was part of the decline was planned as they brought Mustang Mach-E production down for several weeks so they could almost double capacity. So now uh, they've got their capacity for the Mustang Mach-E to almost double to where it was before. So they really ramped that up due to seeing strong consumer demand. They said, hey, we can go ahead and ramp up production here. Unfortunately, Ford had a fire in one of their production plants, so they found and fixed the root cause of that fire that happened in the Ford factory. So that also paused production, and Ford has taken a more cautious approach to ramping up and rolling out their new cars. They spend more time testing uh, product quality and going through quality checks more so than other providers. They say they'd rather get it right before they send it out into the market instead of sending out it in the market, finding out something is wrong and having to issue a recall. So right now they're shipping Ford F-150 Lightnings again. They're taking new orders and increasing production to an annual run rate of about 150,000 units, about double what they do now. So they've really increased their production significantly. Still though, I mean, if you compare with the leading car EV car seller in the world, which is a Chinese car company, BYD, they sold around 1.8 million units. So Ford has a long way to go to get up to that level, but they're managing it slowly, right? They don't want to quickly move to EVs and give up those very lucrative sales of their legacy car brands, right? Their, Ford F-150 pickup truck, their, Ford Mustang sports cars, and the Ford Bronco now has been really popular. So they want to continue to milk those and generate a lot of cash from that, and then use that cash to invest in the growth of these new segments. Ford is also producing its own batteries, so their preparation is already underway for their LFP battery plant in Michigan, and construction continues in their Blue Oval SK battery plant in Kentucky, and of course they already have one in Tennessee, and they plan to transform their Oakville assembly complex into a Canadian hub of electric vehicle and battery pack manufacturing. So this is well underway. That I said earlier, they spent billions of dollars already converting some of their existing facilities into electric vehicles, adding new facilities, and everything that's required to ramp up production and move towards EVs. And here's an interesting thing that they get to benefit from, right? Their progress towards locking in all the raw materials that they need to support their capacity targets for 2026, I think this should read, and beyond. Ford, because of its scale, already has an advantage in securing raw materials. They can go to suppliers and deals because make better deals because of the strong buying power they have due to their legacy models already, right? So let's say, for instance, they go to I don't know if they use Goodyear tires, but let's say, for example, they use Goodyear tires and they need the tires for EVs also, but they use the tires for their legacy cars too. They can go to Goodyear and say, hey, we need this many tires. You could sell it to us at this rate. And if you don't give it to us at that price, we're going to go to Michelin or we're going to go to someone else that's going to provide us those tires at a better price per unit than you might provide. And they can do that with, EV specific materials too, because their suppliers are confident that Ford is going to reach a certain scale. They're confident that Ford is going to be around for a long time, compared to maybe a newer EV company with questionable financials. Suppliers may not feel as comfortable securing long term deals with those kinds of companies. So that's an interesting characteristic to look at. So Ford says we plan to be surgical about where we play and how we win with the right products, the right cost structure, and the right price points. We do not subscribe to a win vehicle share at any cost approach. So that should be reassuring to investors that Ford is not going to sacrifice profit margins at the expense of market share, something that one of its rivals, Tesla, looks like is going for, right? Tesla has lowered prices, I think 7 or 8 times in the last 3 months, just focusing on gaining market share, increasing output. Ford says we're not subscribing to that model. We're going to take the right products at the right cost. We're going to be surgical. We're going to focus on profitability. We're going to be more sustainable in our approach. We're going to be more disciplined and prudent. And as an investor, I like that approach a lot better than this. Let's just go and try and take market share. Who cares how much money we lose on the bottom line? That's just my opinion. That's just my preference. You might prefer a company that just goes all out for growth. That might be your investment preference, right? We all have our investment preferences. But for me, I like this approach. I think it's more prudent. I think it'll work out better for Ford's bottom line to take a more stepped approach. All right, so that's all I've got for this video in how Ford is attacking the EV market. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.